Good morning, everyone, and welcome to another edition of The Daily Trader with Kevin Hincks. I have two paper money trades for you today on two high-profile names. We'll look at Nvidia in the news today, and we'll look at Google Alphabet, one of the less expensive of the Magnificent Seven names in terms of valuation. We'll look at both of those today. First, let's get right to our first trade of the day, and that is Nvidia. Nvidia in the news today, you can read it, it's all over the headlines. The stock is down today as we go to taping here, down about 6%, down $6.70, trading about 105 and some change. What we're gonna do is take advantage, or try to take advantage, of that high implied volatility and do something in the short Vega camp. That is the short put vertical. It's bullish, passively bullish. I'll show you what I mean by that. We're gonna sell, we're gonna go out to the May 2nd expiration. Remember, now they don't have earnings till the end of May, May 28th. So we don't have to worry about earnings there just yet. So we're gonna sell the 190 put vertical in the May 2nd expiration. Now the May 2nd expiration is 16 days away. So it's 2.5 weeks till expiration, and the 100 put is currently a 64.5% probability of finishing out of the money. So it's a high probability trade, little on the aggressive side as the expected move is about $11. We're about half that inside that move. If you wanted to go further out, you could lower it to the 95 would be about where that expected move is if you want to sell the 95 strike. We're doing the 190 put vertical. We're selling that. We put it in for about $1.95. It's trading about $1.93 right now. So right around the 195 level, selling the 100 put, buying the 90 put. The risk on the trade, the difference between the strikes, $10 in this case, minus whatever credit you take in. If you take in 195, it's $805. The break even is that short strike, the 100 strike, minus the $1.95 credits you took in. So right around 98.05 is the break even on this trade. Remember, the risk, max gain is the credit you take in. The risk is the width of the strikes minus the credit you took in. So a high probability short put vertical in Nvidia that collects data, is risk defined, and again, high probability. Let's get to our second trade of the day, and that is Google Alphabet. Now, Google Alphabet, a little different of a story. It's now trading, I'll give you the numbers. Last 6 months, down 6%. Last 3 months, down 21%. Last month, down 3.9%. So it is down in just about every metric, as you know. The one that's interesting, 12 months, down 0.25% over the last 12 months. So that's even with the rally in the S&P 500. So what we're doing here is, remember, this has earnings on April 29th, so you have to be cognizant of that. Make sure you understand when the earnings dates are. We're gonna go ahead of it and then behind it, and I'll show you what I mean. We're gonna buy the May 9th 155 call and sell the April 25th, that's before the earnings date, 165 call. So about a $10 move. We put that in about $4.95. It's trading about $5.38. Google has rallied off the recent lows. Now, what this allows you to do, a trade like this, remember, the risk on the trade is the debit paid. The target for this is the short strike of 165, about $10 higher than it's trading right now and in line with that expected move for next week. But what it will allow you to do, you're establishing a position that at the end of next week, you could extend duration into the earnings week. So the risk on this is the debit paid. The target is that 165 strike. And this could allow you, because we're 2 weeks out, you could, at the end of next week, buy that April 25th in and sell the earnings event week, which will be at a much higher implied volatility, really chip away at that net debit. So two trades today in Nvidia and Google Alphabet, one short put vertical, taking advantage of the high implied volatility, and then a long call diagonal on Google, working from after earnings and then before, where you may be able to extend duration into the earnings event. That's our show for today, everyone. We'll see you tomorrow with another edition of The Daily Trader. I'm Kevin Hincks.